Bruce Lee once said, I don't fear a man who knows 1,000 kicks. I fear the man who knows one kick and practices it 1,000 times. What does this have to do with trading? Everything. Stay tuned. Hi, this is Lloyd with Black Bear Dog Trading, and as always, welcome. I appreciate you being here, and I'm glad to have you on my team. So, what does knowing one kick, practicing 1,000 times, having to do with trading? As I said already, everything. Because it means knowing one strategy that you use over and over and over again, day in, day out. It's the exact same method with the exact same rules. Nothing changes. I call this simplistic trading. And there is a simplistic trading method that goes with simplistic trading. While it is not constantly producing winners, it's a winning method. The problem is, for many traders, after a short while of using that simple method, it becomes boring, monotonous. It's not exciting. There are no fancy indicators, no over-the-top algorithms, no AI, no sophisticated math formulas, nothing. Just a plain, clean, simple chart like you see in front of you with one indicator on it that isn't even set to a normal standard parameter, and that you trade according to what you see on the chart. And it's a rinse and repeat day in and day out. The major advantage of this simplistic trading is not only that it works because it's power to generate profits, lies in its simplicity, but it actually teaches you how to be a trader. Above all, it teaches you patience. And this method, as simple as it is for no matter what level of trading experience you're on, be it a beginner, a total novice, an intermediate, an advanced, even a professional. This trading method, with its simplicity, is the one kick that you practice 1,000 times. What happens when you have one particular thing that you practice over and over and over? Well, you become an expert at it. You become exceptionally good at it. You know what works, what doesn't work. You have premonitions of if you do this, this will happen. You basically can, quote unquote, foresee the result before you actually took the trade. That's the power of this simplistic trading strategy. So let's get into this. What is this simplistic trading strategy and how does it work? Well, it's called simple EA trading. That's the name. As boring as the strategy itself, the name is boring. It comprises of nothing more but price, which are the candlesticks you see on the chart, and a moving average, in particularly the 55 exponential moving average, as you can see right here, that is set to close. The reason we use a 55 and not a 50 is because 50, 100 are all, or 200 even, are all round numbers. And round numbers is what attract traders. And so round numbers are usually oversaturated, and you can't really make a solid prediction or a solid opinion about what price is doing when you rely on a indicator that is just oversaturated by traders who really don't understand what they're doing. The 55, on the other hand, is what's being used by professional institutions, by professional traders, and by myself as well, because it is based on Fibonacci. Fibonacci are natural numbers that occur within your environment, they occur in nature, they occur in your daily life. And 55 has proven to be a stronghold that when price hits, unless it breaks through up or down, usually respects that level. And based on that, you can make a much more accurate determination whether price is in the upswing or in the downswing, meaning whether you have an uptrend or a downtrend. Let me show you exactly what I'm talking about. Right here, you can clearly see that we are going up. This is not down, this is up. And the 55 price comes down to here, but it doesn't go below it. Right here, oops, sorry. Right here, it respects it, right here. And here, we even have a respect. While it broke down, it went back up again. With the 50, this would already be below now, and you would think that you have a reversal in order. The trend may be shifting, the trend has exhausted, whatever it may be. Not the case with the 55. It's a much more accurate level of determining the trend. And based on what the trend is, whether you should focus on a buy or a sell opportunity. That's it. Let's just look quickly at, I always make that exact same mistake. I don't know. Okay, here we go. Now you can see it is clearly down, and we see that right here. All right, and again, even though it broke through, it went back down again, and then it continued. So the 55 EMA exponential moving average is much more respected than is the 50 moving average. Here we go again. Oh, let me get rid of all these things on here. And here we see the same concept. We just started going up for a little while at least. Here we go. And here we can tell very clearly we were flat or we were consolidating, whatever term you want to use. So it's very obvious that 55 EMA is the level that you want to use to determine where you are with your price, whether it's up or down. Now, for this to have a double punch, we rely on only one time frame, and that is the 1 hour time frame. As you see right here, we have only one time frame, the 1 hour. And that is because the 1 hour time frame combined with the 55 EMA form a stronghold that is really very reliable and very solid. I have a little ebook that you can download. It's a PDF file that explains all of this in detail. Yours free, link below. Do get it, and you'll see exactly what I'm talking about. So how does this simple strategy work? Well, the concept is actually very simple. Everything is based on closed bar. Closed bars meaning bars that have already sealed. Not like this bar right here, which is still going back and forth. And it's not a closed bar. It's what's commonly known as a live bar. It can still go any direction. A closed bar is a bar where it's done. Price can no longer change. The EMA associated with that particular price can no longer change. The direction of that bar can no longer change. It is set. The deal is done, so to speak. So how do you now decide when to enter and which direction? Should you enter a buy or should you enter a sell? Concept is very simple. When price is above the 55 EMA, you look for buy positions only, nothing else. When price is below the 55 EMA, like is the case here, on the USD JPY, you look for sell positions only and nothing else. Now, let's go back to the Euro USD again. Price is clearly above the 55 EMA, so I look for a buy opportunity, but it must be closed bars. You just notice this bar just retraced down a little bit. That bar does not count. It's not a closed bar. So we consider the last two closed bars to determine whether or not we have a possible entry. And with the last two closed bars, I mean this bar here and this bar here. And in order to have a buy opportunity or to trigger a buy position, both these bars must be bullish. They must not only be above the 55 EMA, they must also be bullish. That's the requirement. The reverse is equally true. If I go back to the yen, because that happened to have a down thing, the condition for a sell opportunity is price must be below the 55 EMA, and the closed bars that we look at, the last two closed bars that we look at must be both bearish or going down. And this is the closed bar, this one is bearish, and this is the second closed bar, but that one is bullish. And that would not be a trade. So this is how it works. It's that simple, it's that easy, it's that straightforward. There is nothing else that is complex about this. This is just the way it is. That is the whole strategy. And yeah, you do this day in, day out. It's boring, it's mundane, it's monotonous, and so you run into the temptation of, that you want to look for something fancier, you want to have something a little flashier, but that's also where it usually goes wrong. This simplistic method has a almost 50% of being profitable. So it works. It is profitable. Despite you're having losses, you end up being profitable. Now, this is not something where you just sit here and you're going to have one entry after another. It doesn't work that way. This method, as simple as it is, will teach you patience, which is a virtue when it comes to trading. Patience. You may get on average anywhere from 7 to 10 trades per week, and that is based on which currency pairs you run and what time of the day that you execute this system, but no more than that, possibly even less than that. So again, the parameters are 1 hour chart. We only use either Euro USD, USD Yen, or Great British Pound USD to trade this simple method. That is it. Condition to enter a trade for buy, price must be above the 55 EMA, and the last two closed bars must both be bullish. Reverse, sell opportunity, price must be below the 55 EMA, and last two closed bars must be bearish. That is the entire concept of this method. Now, to facilitate this a little bit, to make it a little easier, because so far you're doing all this manually, and while this absolutely works, I actually have an EA, a bot, that will do this for you on autopilot, and I'm going to load it for you right now. Again, this only works on MetaTrader 4 because that's all I do, that's all I have. So I click it here. This is the entire setup. There is no more to this. Lot size, maximum spread, so you keep your costs under control. Fixed stop loss in pips. How much is your risk to reward, your reward to risk ratio? Tells you take profit is stop loss times 2 in this case. So the EMA period, 55, which I already explained. Now, for maximum benefit, you can trade this during the London, New York session only, or you can set this to false, and I'm going to set this to false, which now means you can trade this all day long, all night long, as long as there is an open Forex market, you can trade this method. If you prefer not to do that, The London and New York sessions have proven to be the most liquid. They have the lowest spread, so they cost you the least. And they also have better volatility and movement. And they're also more, what's the word I'm looking for? Other than the British pound, they're also more stable. They don't have these gigantic spikes up and down that can drive you nuts. So these are more stable, more reliable currency pairs, and they work super well with this simplistic trading method. So auto trade is set to true. That means this simple bot will do all the trading for you. It will determine whether price is below or above the EA. It will determine whether the bars, the last two closed bars, match the condition we're looking for. And if so, it will enter the trade. So let me click on OK now that you've seen the menu. And let me also close this indicator window. There we go. And this is the entire menu that you're getting. AT on means that auto trading is set on. I can trade this all hours. And then I just simply have a timer that shows that the market is actually working. There is movement in the market. This is the little menu. When it's in light gray, it means it's of no consideration. It turns red when we're in sell. And if I were to go to Euro USD again, you see it turns green. Now it's buy, and sell turned out gray. So this is very simple, and it tells you exactly what is happening. It's a buy bias, meaning we have a buy opportunity because price is above the EMA. Yes. Is price aligned with the EMA? Yes, it is. And finally, is the bar size, which must be a minimum of 25 pips in compliance? And the answer to that is no. A little word about bar size. You see, when you take this trade, you don't want to just go for any trade. A tiny little bar that is almost a doji will not qualify because the signal isn't strong enough, and while it went above temporarily, it wouldn't really hold, and it may reverse. So we're looking for good solid bars, like for example right here, just to give you an example. These two closed bars, once they became closed, didn't matter that the third bar over, which was then considered to be the live bar, was turning bearish. They were two solid closed bullish bars above the EMA, with the EMA heading upwards. Perfect entry. Sure enough, look at the run. And the bottom line is, while it looks like, and I'm saying look, that it may have come to exhaustion, it's no guarantee. It may still continue upward. It may only be a temporarily slump, like a temporarily consolidation, and it may still continue upward. So this is the simple method in a nutshell, and the bot does all the work for you. If you set this to, let me change this to manual mode. If you set this to manual mode instead of auto trading, you set this to false. Manual mode, it tells you now that the AT or auto trading is off. The difference now is the bot will still do all the analysis for you. When it finds a valuable entry, you will get a message popping up on the screen, in the middle of the screen, that will tell you, hey, there is a possible buy or sell trade based on the condition. Do you want to take it? Yes or no. Click yes, it will automatically enter the trade. Click no, it will simply go back and continue with its analysis without doing anything further. Last but not least, also automatically your stop loss and your take profit are set. So it is fully automated. It's fully, even on manual mode, your stop loss and take profit are auto set. The main difference between that will stay manual is whether you're on autopilot or you're in manual mode. Once you enter a trade, it will pop up here telling you a button that will tell you You can close the open trade if you want. Simply click the button, and so you don't have to let your stop loss being triggered or go all the way until you hit your take profit. If you don't click the button, that's the premise of this trade. There is no partial profit to be taken. There is no trailing stop. This is simple, straightforward, as easy as it gets for anyone to use, regardless of the level where you're at. It's really that simple. This is the entire trading method, the entire simple trading method. And by the way, let me show you when I set this to true. Only London, New York session. I click on OK now, and you see it changes. London and New York is on. So it will only trade during London session, New York session, and the overlap of London and New York session. And I personally prefer to let this just run because I run it on autopilot. So for me, it can run all day long. As a trade comes in, I will check it and decide from there. But this, while I am absolutely against auto trading in this particular instance, because of the time frame we use, because of the currency pairs we use, because of the way a buy or sell entry is being measured before the actual order is placed. I trust this system well enough. I've used it often enough, long enough, that I know that I don't need to panic the moment it enters a trade. Again, as Bruce Lee used to say, one kick practiced 1,000 times. One simple trading strategy repeated over and over and over again. But it works. So now, little gift to you. It's Christmas after all. You can download the simple strategy below. There is a link. Simply install it in your MetaTrader 4 in the experts folder. Then load it on your chart. Add the moving average set to 55. Download the booklet that comes with it and read it. It'll tell you what you need to do. And you're ready to rock and roll, and it's really it. It's that simple. So does this work? Well, I have, here is my result so far. I did 3 trades so far. My broker charged me 82 cents in fees. I had an $81 profit, $175 profit, and today I had a loss. And the loss is $93. And as you see right here, that was on the 16th. The other two were right here on the 15th. This is, by the way, also something I recommend you do. By default, MetaTrader will not sort on the closing time. It will sort on the ticket open time right here. I don't like that personally. I like to go by the closing time because it shows me what the result was of my actual trade. So to do that, all you really need to do is click on the time label right here, and you see this is the default. So you click on the time label until you get the times in the order the way you want them, and that's it. You're done. This will stay. There is no special save. If you were to exit MetaTrader 4 and go back in, this will still be there, and it makes it easier to determine where you are with your trades, what you've produced today, and whether or not you're in the positive, the negative, so forth. This is the entire system. Again, it's yours as always, free. You don't owe me anything. You can download it in the description box below. That's where the link is at. And that is it for today. Thanks for being here. This is Load with Black Bear Dog Trading signing off. And as always, take care of yourself and God bless.